As we sort of get closer to the end of what has been a really tumultuous year, be it the global economy or really central banks, what are you watching for? Is it still sort of about whether we've seen the bottoming out when it comes to China and how that plays out across the region?
Yeah, I think that there's a couple of important things. One, of course, is China. Because the third quarter looked pretty good, but as just mentioned, some of the numbers that have come out more recently have shown some weakness in terms of recent numbers in retail sales and such. And so it's very uncertain whether China is firmly on its feet, and we'll be watching that very, very carefully. The other is inflation. Inflation has been a bit of a bumpy ride. It is well down from peak, but it has been bouncing around in places like the Philippines and in India. And indeed, there have been some hikes in monetary policy in the Philippines and in Indonesia and in Thailand. So those are critical things that we'll be watching on the risk side. On the upside, that provides some hope that there's some floor for the economy is a bit of a turnaround in the tech cycle and semiconductors, that the global demand for semiconductors has turned a corner. It's coming back up. And if that continues, that would be great, particularly for North Asia, for Korea and for Taiwan, but for much of the region as well, if that tech cycle turned upward.
Steve, what about 2024? Do you think that sort of resilience that we see, particularly across some of these stronger regional economies, is going to hold, or is there going to be a bit more uncertainty going into, particularly with some of these sort of idiosyncratic factors, like in Australia, where we're expecting that mortgage cliff to start weighing on consumer and household sentiment?
Yeah, I do think, largely speaking, Asia is going to hang in there, and it kind of has to hang in for another 6 months or so. My feeling is that the second half of the year will be better than the first half of the year, if indeed the global economy can accelerate. The U.S. economy gets beyond the current rate hike cycle. Europe as well, and so global trade begins to pick up. We haven't seen a pickup in global trade yet. It peaked last September, so a little over a year ago, and it's just been almost flat ever since. So I do think that global trade will pick up in the second half. And if inflation can come in further, and we're guaranteed there'll be no more rate hikes in Asia, I think domestic demand will hold in there. China stimulus should give a little more strength to the Chinese economy in the first half of next year. And I think we can make it through the year with continued modest growth through the first half of the year, a bit of acceleration in the second half of the year.
Steve, we've seen such disparate performance, not just in economies, but also financial markets. We talk a lot in the US about how financial conditions are impacting the central bank's decision-making process and so on, and how they're tightening and maybe loosening a little bit. Are there countries where you see financial conditions reflecting really fundamentally the economies, or are there countries where, maybe they're not so in sync? I mean, we've seen Japan's market up 25% this year. Korea looked to be taking off last week, but we're still only up 7% on the year.
Yeah, Japan good, quite amazing actually. In Korea, I think actually the recent uptick in Korea is consistent with the way the economy is going these days, and things are looking a little bit better now than they did, say, over the past 3 or 4 months. I think one of the biggest factors to watch in Asia, aside from financial markets, is simply a foreign exchange. This is where there's been so much weakness across the region in terms of foreign exchange versus the U.S. dollar, and has been a real concern for central banks around the region. And one reason why some of the recent hikes, say, in Indonesia and in Thailand. So the foreign exchange rates illustrate the wide gap in interest rates between local countries in the U.S., but also is reflective of the pace of the economy in each of the countries as well. So I've been keeping a very sharp eye on foreign exchange rates.
Steve, of course, the key sort of geopolitical event that we're focusing on this week is the long-awaited Xi-Biden meeting. Do you think some of the rhetoric going into this leaders' meeting gives you a bit more optimism that this kind of, zero-sum industrial policy might be taking a step back? Do you think there's going to be kind of more of a push towards re-globalization, if you will, and whether that will help support Asian growth next year?
Well, there doesn't seem to be much of a push anywhere in terms of making any fundamental changes, say, in the tariffs that have been in place on the U.S. side since the Trump administration, and similarly on China. And so I actually don't know if there's going to be much change in terms of that side of the trade equation. I certainly think it's absolutely a plus that they're talking, and I think what it will do is pave the way for maybe more realistic talks that are substantive at ministerial level going forward. I think the talks that we've had over the past 6 months or so have really been just to grease the wheels to get this meeting going between President Biden and President Xi. Maybe after this, maybe we get a little more substantive discussions about issues of trade, whether it be in terms of the issues of the tech industry or tariffs in general. But recall that there'll be an election in November in the U.S., so there's going to be a lot of pressure to kind of keep that keep the pressure, if you will, on China at least through the election next year.